What's up, everybody? It's me once again. Yeah. So, as you can see on your screen, these are the three things that I wish we could discuss for the entirety of this video. Okay. So, well, I don't know. I do not know how to force this thing in people's heads, but it's just what I'm going to say and what I did say before, and I really mean it. Like really, like when you get to understand what I'm about to say to you, you really need to forget everything that you know about the market, forget everything that you've been taught before, okay, and really pay attention to what I'm about to show you, and tell me whether or not the things that I'm highlighting or the things that I'm showing you aren't really what's really happening in the charts. Okay, it could really make your trading easier. It puts you at an advantage above anyone else. Okay, when you look at these signatures, you get to understand price. You feel in line with it. You get to be uniform with it always. Okay, so what do I mean? Okay, I'm going to say this. Price goes up or down for one of two reasons. Notice how slow I'm saying this. Price goes up or down for one of two reasons. One of two reasons, meaning it's going to go up for either one reason, or it's going to go down for either one reason out of the two. Okay, what are those reasons, you may ask? What are those reasons? Okay, well, I won't write it down, but you should really pay attention here. Okay, so price will go up or down. Okay, I will start the buy side delivery. Price, let's look from this point to this point. Let's highlight this portion here. Let's highlight this portion here. And let's highlight this portion here. And we want to lock that this portion here. Why do you think price went up from this point to this point? Why do you think? From this point to this point, why do you think price went up there? We could pick any price range. We could pick any time range, like anything. We could pick and choose any. Even if we go to from this point to this point, it's the same reason. Well, not the same, because this one it's downwards delivery, this one is upwards delivery, but it's similar. It's just the same thing but reflected depending on how price is being delivered. Is it being delivered to the downside or the upside? Okay, we all know that price goes up or it goes down, or it ranges, goes sideways. Okay, it does those things. So now in trending markets, by the way, that's the reason why I like to trade the Nasdaq. It's a trending market. Barely it gets stuck in a range bound consolidation. But yeah, the reason why this price at this date and time, May 13th 2026 at 3 o'clock, the reason why it suddenly stopped here and went up here. Well, it's been going up, right? It came down, suddenly it stopped here. But why did it stop here? It's because, as I already said, price will go up down for one of two reasons, and the first reason would be to mitigate imbalances. What are imbalances? They are gaps. What gaps am I talking about? What types of gaps? Because we have different types of gaps. Even this one is a gap. Okay, so the market, it goes up or down to fill gaps. This would be a typical gap, volume imbalance. It's gap number one. The second one would be a fair value gap. What is a fair value gap? Okay, when you look at this signature here, you look at 3 consecutive candles in terms of a fair value gap. You look at 3 candlesticks. Okay, so you would look at this one for this case here. You would look at this one, the second one that overlaps, takes out the high of this one, and the third one that creates this low, and this in between. This is a fair value gap. It is an imbalance in price. Okay, so it's going to go up or down to mitigate that imbalance. Okay, so why did it stop here? Now we are looking at it on in terms of downside delivery. Okay, because from this point to this point, it's downside delivery. Let's highlight it. Let's highlight this part here. We are going to change color to this. Okay, from this point, okay, we want to lock that as well. Okay, so from this point to this point down here, it suddenly stopped going up here. As it's been going up, suddenly it stopped and then came back down here. But why did it stop here and why did it stop here? It stopped here, as I already said. It goes up or down to mitigate gaps. Your typical gaps would be volume imbalances. Second gaps would be fair value gaps. What are fair value gaps? I already said. Take a look at this example. This candlestick's high. This one that overlaps in between is the one that creates the imbalance or the gap. This one, the third one. So you look at 3 consecutive candles always. Okay, so the third one that forms this low, it creates the gap. So the market will come back down or go back up to bridge the gap. So this is the gap in this case. Okay, so let's make it white. So in this case, this would be your gap, your fair value gap, and it's the only reason why the market came down here and then started reversing up. It came back here to mitigate this gap, to recover the imbalance that has been caused within these gaps. Okay, sometimes you do get a full fill, like it comes back down entirely and then it goes up. That would be the best case scenario, but in this case it just kissed it and then started going away. Obviously there are levels in this gap. We have the 25%, the 50%, the 75%, but we do not want to focus a lot on those gaps for now. Hold on, what just happened, guys? Okay, I think it was my network. We do not want to focus on this, on the too much detail for now. Okay, so this is the reason why it came back down here. It came back down here to breach this gap, to try and breach this gap, and then it started going away from it. After it had breached it, it started going up, but then it suddenly came to a stop here, to this gap. It didn't stop here because of anything else besides this gap. Okay, it stopped here because of this gap. Let's highlight it as well so you could see what is it really that I'm talking about. Okay, notice how, look at this candlestick's low, the one that overlaps in between, and this candlestick's high. This is a gap. It's an imbalance. This one in between, it's an imbalance. So it suddenly came to a stop here because it had already filled this gap. It had already filled this gap and started sending price lower. Okay, I want you to notice this one as well. This is a fair value gap. This would be your fair value gap. This candlestick's high. This one that overlaps in between. This candlestick's low. Watch how it came back down here to and closed within this gap. It came back. Okay, we had two gaps presented, which was this one and this one. It came back down to this one as well. Yes, this is nearby. Came back down to this one to kiss it and then move away from it, but this one got filled entirely. So that's the reason why it came back down from this point up to here. It's this gap plus this one. Okay, and then it started sending price away from them. That's reason number one. Basic, simple, easy to understand. Okay, that is the only reason why that happened. Okay, reason number two. After it had filled these gaps, why did it go up here? Why did it go above? Go shoot above like it's such a very high speed? Why? Here we have liquidity, which you typically call buy side liquidity, meaning anyone who was chasing the market down, trusting this high to hold price, they have their protective stops above these relatively equal highs, this high and that high. So it's buy side liquidity. Anyone who went short, they have buy stops above here. So the market is going to target that. It's true. It's going to do it, and it's going to do it quickly. Okay, it's going to do it always, and it always does. Always does. Okay, so it moved away from these gaps and then started sending price higher to target, to engage anyone's stop that's resting above these relatively equal highs. Okay, so this would be your typical buy side liquidity. Okay, this would be a typical buy side liquidity. That's as simple as it gets. Really, I want you to view any chart and tell me if what I'm highlighting here isn't really what's appearing on your chart. Okay, so that's the idea. That's what happened. It stopped here because of this, came down here to mitigate this, also this, kissed it, moved away from it to do what? To engage anyone's stop that's resting above here. Simple logic. That's it. Okay, and we are going to remove everything and anything here. Okay, I want to focus on the downside now. Want to focus on the downside. Okay, so if we look at this price range here, we look at this, you look at this, why did the market suddenly come to a stop here and here? Why? It's because of this gap. It had already came back to fill these gaps. It filled this one entirely, kissed this one, and then started moving away from it. To do what? To engage anyone's stop that's resting below here. Anyone who was chasing the market up, they have their protective sell stops below these lows, because as you see, this are low, this are low, so they're trusting, really trusting that it is a strong support area where price is going to be held. So they would typically put their stops below here. Okay, so the market went back up, it filled this gap. Okay, from here went back up here, filled this gap and kissed this one, started sending price lower, engaged stops are resting here, went down, came back up, filled this gap. Okay, let me highlight the things that I'm talking about. It filled this gap. You can see how perfect it delivered here, and it engaged anyone's stop that's resting below here, went down, then took a turning point, went back up to where? To this gap. That's where it stopped. That's where the market is always going to react. Stopped within this gap and started sending price lower again. Lower to where? Well, it didn't take these ones temporarily, and then it came back up to fill this newly created fair value gap, which would be on the downside. Came back to it, kissed it, and then started selling price lower to do what? To engage anyone stop that's switching below here. And it took a turning point here. Finally went back up again to this, stopped to this one here, stopped at this one, and went down again. So it's an ongoing process. It's the same thing that repeats over and over again, okay, just in different forms. So those are the only two reasons why the market is going to go up or down. So it's going to go up to go up or down to fill gaps, and it's going to go up or down to engage anyone stops or resisting below or above significant equal highs or low, or just a significant high. It could be a single high from way back, which was left intact. Is going to come back at a later stage to engage stops that are going to be put there, because it's going to be trusted. The masses are going to view it as something that's a strong support or resistance, something that's going to hold price. They're going to think it's the reason why price might react a certain way. Okay, but it's actually not. This, what I'm showing you here, is what's actually happening. Okay, it's what actually, and these things, they are universal. They are very much alive on any and every time frame. You could look at the 1 minute, you could look at the 5 minute, you could look at the 30, the 4 hour, the weekly. They are alive everywhere. They are very much universal. Okay, they are very much universal. So okay, let's take a look at today's price action. Let's take a look at today's price action. So you had this low here. The masses, as you can see what's been happening all along. It's been coming down and then rejecting. People would have thought, okay, it's rejecting, they could trust this, that's support. They put their orders, they put their protective stops here, but the market is actually going to target that. Okay, when you highlight here, this is a fair value gap, this is a gap, it's an imbalance. This is a gap, it's an imbalance, just inverted. Okay, because naturally it should be supporting higher prices, but for the fact that the bias was bearish, the market wanted to come back down here, it became inverted, supporting lower prices. Okay, that's the idea. So it came back within this gap and that volume imbalance several times to fill those gaps, and it started sending price lower here, engaged anyone stop that's resting below here, and started going up again to where? To this gap yet again. And now it stopped here and went down because of this gap. It had came back to it and it had filled it. That's why, hence why it stopped. It started selling price the opposite direction. Okay, so currently what's happening now, you could see clearly that we have this, and it is the only reason why price is being held at this level, this gap. It's the only reason. There is no other reason than that. Okay, I don't know how to make you understand, but yes, that's how it is, and that's how it's been, and that's how it's always going to be. It's not because of anything else besides what I'm showing you here. It's what's really happening. I don't want to challenge anyone or say whatever you are looking at is crap. I don't want to disrespect. I don't want anyone to feel disrespected in any way. I'm just saying, when you really let your guard down and focus on what I'm showing you right here, tell me whether or not is it not what's happening behind the charts. Okay, let's look at the 4-hour time frame. Let's look at the 4-hour time frame. Just get more insight. Okay, when you look at the 4-hour, the gap that I highlighted on the 1 hour, it's much smaller here on the 4-hour, but still the same concept, same idea. The reason why the market went up here, it was going up here to fill this gap, and it did. Started sending price lower, send price lower to her to engage anyone stop loss resting below here, anyone stop loss resting below here. After it had done that, it did what? It went the opposite direction, and it stopped where? It stopped at the gap that was highlighted there on the 1 hour time frame. That's where it stopped. It may not appear here on this time frame, but it is there on the 1 hour, on the 1 hour or 30 minutes or whatever, but it is there. So I don't want to focus on every time frame, because what I'm showing you now is universal. You want to, okay, but then let's talk about that at a later stage. How to offload information to your advantage. How to offload information to your advantage, basically that means what you should focus on for your own good. You don't want to focus on each and every time frame, because these things, what I'm showing you here, is very much alive on every time frame. It's there on every time frame. Okay, so you want to focus on a few time frames, and to determine bias, I think what was the first point or first question of this video, but I haven't talked about it really, and already it's a long video, so we might cover it at a later stage. Okay, really, if you are interested. So at the end of the day, I'm not doing this for me. I know what I'm looking for, I know what I'm saying, and I really know that it's very much true, but doing it for the public's interest. Okay, so it stopped here because of this guy over here. Okay, that was the gap. The market can retrace to a gap several times, as many times as it wants. So that's just how it is. Okay, it's always true. And then we're going to go back to a 4-hour. Going to go back to a 4-hour time frame. Like really, we could rant on and on about these things, but they are really what's happening behind the markets. They are really what's happening behind the charts. Like honestly, the big moves, your big moves, you are going to get them because and only because of what I'm showing you here. So this was the gap. It came back down here to fill this gap and started sending price low to door to engage anyone stop that's resting above here, and went ahead to create new highs, all-time highs. Okay, so this one was a big move as well, but then it came back down here and suddenly stopped. It's because it came back here, it filled this gap. It can overshoot it sometimes, it can do that, like how it's done. It did it here, but for the fact that it's been coming back to this gap and then closing above it, come back here, fill it, closed above it, and it's enough for you to know that this market is going which direction. Okay, so you determine your bias. It's one of the ways you determine your bias. And then it closed. The next candle that opened a huge volume imbalance, but then because of its willingness to go higher, it didn't create any major low here. It just went up, took out anyone stop that was resting below here, and started sending price higher to create new highs. Okay, so that's just it, guys. Those are the only reason why price does what it does. Okay, so you could track any market at any given time. This is exactly what you will see. 1, 2, 3. See that 1, 2, 3 consecutive candles, 3 consecutive candlesticks. This one and that one. This one's high, that one's low. The one that overlaps in between is the one that creates the gap. Watch how it came back down to it to fill the entirety of this gap and started sending price away from it, because it did what? It had filled this gap. It has filled it. Okay, so this is actually what's going on behind the market. This Okay, so I don't know how to because I'm at the end of the day, I'm not trying to convince you, I'm just highlighting you what's actually happening behind the market for you to see, really. Okay, because these things, they are all over. You see, I'm just moving around and highlighting what I've been saying to prove what I've been saying. Okay, so it's not for any reason whatsoever, but what I'm actually showing you here, it's what's happening. So yeah, I hope you guys find this insightful. I hope you guys find this insightful. I'm open for further discussions, but not debates. I don't like debates. Okay, so just, if you feel like what I'm saying here is crap, it's bullshit for you, just focus on whatever works for you. Okay, and leave whoever wants to watch this, let them do it. It's their own choice. Okay.